Yesterday was a monumental day for the cryptocurrency market as we saw US lawmakers push back and actually look to infringe on Gary Gensler and the SEC's regulation by enforcement as it relates to the digital asset space by passing a bill. We are absolutely going to be taking a look at that and what happened as it only took place yesterday night for me in the UK. We also didn't just have that taking place yesterday. We had Nvidia's earnings. Nvidia make up the Magnificent Seven, and they make up a large percentage of the stock market's gains. Now, if Nvidia take a hit, the whole market takes a hit, and so does the cryptocurrency market as it is a higher beta risk play. We also have the Fed's minutes. So we have a lot, as always, ladies and gentlemen, to cover. This is going to be another jam-packed daily cryptocurrency market update. And if you are new to my channel and finding yourself on my videos for the first time today, what are you doing not subscribed? We aim to be the #1 platform for cryptocurrency and financial information. And I need you guys' help to get me there. We've got lots of things coming. I'm on a business trip towards the end of this month. And then when we come back, we've got live streams. We've got team members coming on board to really help us bring you guys the best quality content that I can possibly deliver. You know, this is just as much a business endeavor for me as it is a righteous one, because I believe that through financial education, everybody can change their lives, because you need to. And if you do understand the great monetary game that is being plagued on all of us, they continue to proliferate the money supply, which means you get continuously poorer whilst the elite get continuously richer. And they do that via owning assets. So we can cover that in a totally different video. We have a lot to get into. Let's get into it all. And let's start things off with the traditional markets before we dive over to the cryptocurrency space. And yesterday you had, is it a bird? Is it a plane? No, it's Nvidia's earnings. And of course they beat, they beat expectations. It wasn't as much as it has been previously, but it was massive. They also showed over a 400% increase in data center business. They just partnered with Dell, which is a Hedera governing council member. Hedera is my largest position in the cryptocurrency space. I think it's not even a blockchain, it's a DAG, but it brings a lot of the capabilities that blockchains bring, but in a very efficient manner. We speak about it all the time, so we're not going to do it on these daily market updates. This is interesting. Nvidia is a chip maker, so they're not even the AI system themselves. They're the people that will enable AI through CPUs and predominantly GPUs. It's kind of like people betting on infrastructure when the internet first came about. Eventually, it will move on to the software companies like the social medias, and there's going to be major opportunities there, and we're already seeing some of those companies do very well. We're also going to look at some news from Amazon. So Nvidia obviously up after the closing bell. So many people get wrecked on this, and this is a great example of don't short an uptrend. And unless you see a technical reason to do so, don't just think, oh, well, something's up this much, I'm going to short it. You will lose your money doing that. And we are developing courses at the moment, our market mastery course that we will be releasing hopefully next month. And we will look to do discounts for students and things like that. So really excited about that. But Nvidia continuing to beat. Nvidia is very important for the overall market because it makes up such a large part of the S&P and the market generally. If it took a hit, the markets would take a hit. And of course, Bitcoin is a higher beta of that. Also, you had news in regards to Amazon that now plan to give Alexa an AI overhaul and a monthly subscription price. Everything's monthly subscription. These guys actually start charging you. I use Amazon. They charge you for using Amazon, and then they also charge you or also include adverts. Let's take a look at Amazon, because we have a higher price target for Amazon, and everyone was saying, no, what are you doing shorting Amazon, longing Amazon because Jeff Bezos selling his stock, blah, blah, blah. We don't give a damn about the news. The sheep care about the news. Why is it the news is always horrific at the bottom of a bear market and amazing at the top of a bull market? You can't trust the news and what's happening. You can only trust the charts. It's the only solid ground you can put your footing on. Okay, and Amazon is going, in my opinion, to $263. We've been saying that sub 130. It's up nicely for us. We've got loads of other stocks like Robinhood and things like that. And just talking about stocks, lots of stocks that we have in our stage twos coming back and finding support where you'd expect them to do exactly that. Can you see how lots of these coming back? We've got loads of them. But let's move on from that. So Amazon looking pretty good. Yesterday wasn't just significance because of Nvidia's earnings and, of course, the crypto bill that we're going to get onto. You also had the Federal Reserve's minutes that indicates worries over a lack of progress on inflation. Now, people take that headline and go, oh, it's the 1970s. We saw so many ding-dongs on Twitter with massive accounts saying, oh, the second leg of inflation's here. Get ready for a 1970s style inflationary resurge. Just understand that the context is vastly different. History does repeat. There's nothing new under the sun. I think that's a biblical quote from King Solomon. But things often don't happen exactly like they did, certainly under a completely different set of circumstances. You know, if anybody's into sort of science and chemistry and things like that, you know, if you put different things into the mix, you get a different result. And that's what people are largely lacking. Just like with the debt ceiling, everybody's saying we were going to get a crash, and it was like, well, there's now 2.4 trillion that the Treasury have been draining very quickly in the reverse repo, not 100 billion that got drained very quickly and caused that clog up that caused the yield curve inversion that subsequently led to March 2020. You know, and a perfect excuse for them to pump liquidity into the system. We don't want to get down that rabbit hole. So participants observed that while inflation had eased over the past year, in recent months, there had been a lack of further progress towards the committee's 2% objective. The summary stated, UK inflation came out at 2.3 yesterday. The headlines for that were UK inflation not coming down as quick as expected. Damn, I mean, what do people want, you know? The minutes also showed various participants mentioned a willingness to tighten policy further should risk to inflation materialize in the way that such an action becomes appropriate. The meeting followed a slew of readings that showed inflation was more stubborn than officials had expected to start 2024. And this is the story with inflation. It's been going sideways. So we've said until we start to see a definitive uptick in inflation, we're not going to guess that it's going to just rocket back up and go to 8%. UK went from 11% down to 2.3. We are seeing deflation. The UK finance minister actually begged, I say begged, he didn't get on his hands and knees, but not that that's below many of these people, basically begged the Bank of England not to lower interest rates just yet. And that's going into an election. So this is the general theme. We want to see a continued downtrending inflation. We're seeing a sideways inflation at the moment. This has put the sales, if you look at where the dollar bottomed, it was sort of July on that second higher print. This, of course, is leaning on risk. We need a reversion in what's, you know, seen things do really well from that sort of low and the dollar top. And we've spoken about this in great detail. So this was all that happened yesterday, a lot. And we also had a House passes crypto market structure bill with bipartisan support. So they absolutely stormed it. And the bill was the FIT 21 Act, marks a second crypto-focused piece of legislation to advance in Congress this month. The US House of Representatives passed the Financial Innovation and Technology for the 21st Century Act, known as FIT 21 Act, Wednesday evening, making the second crypto-focused piece of legislation to advance in Congress this month. The bill passes in a vote of 279 to 136. You can imagine Elizabeth Warren was definitely one of those. 71 Democrats voted in favor of the bill. Representatives considered 3 amendments to the bill proposed by Rep. Greg Cesar, D. Tex, Brittany Patterson, D. Cole, and Ralph Norman. Cesar amendment, which sought to decrease the crowdfunding limits placed on crypto, entitled from 750 million to 5 million, did not pass. The amendment proposed by someone and so forth. They also, amendment required the Treasury Department, the CFTC and Securities Exchange Commission to complete a joint study to submit a report to Congress. I think that's fair enough. And this is now heading to the Senate and the White House. This is all really about sort of stopping Gary Gensler's enforcement. So this is from the actual financial House, and they say Gary Gensler's regulation by enforcement is wreaking havoc on American consumers and making markets alike. This approach does nothing to protect consumers, facilitate capital formation, or promote fair, orderly, and efficient markets. FIT 21 ends regulation by enforcement. So happy days. Gary Gensler is getting demolished. I've never seen the SEC, an enforcement agency with an unlimited resource that have an exceptionally high hit rate, get as pounded by the lawsuits that they're putting forward, losing them, than I have with crypto. And I think Gary Gensler, it's very interesting how he literally taught, and nobody really pays too much attention to this. He taught at MIT blockchain crypto courses, and then he went straight into this job. I think he's a stalling agent, if you ask me. Let's talk about Bitcoin. Let's talk about crypto, which we have been doing, of course. But you guys know the plan. Stick to it. There's no need to deviate from it. There's no need to get worried. The same. I see comments every now and then saying, well, what do you think about this crash? Or what do you think about that? I mean, the one before we had this rally was, I'll look at the couple monthly candles. What are you looking at? You know? Anybody that looks at this chart and says it's bearish, where are you getting that from? You're trying to call a double top. Well, like Nvidia, a great example of why you don't call a double top. Total 2 also setting up for us nicely. I think it's likely we do get that Ethereum ETF. That's going to see this right shoulder complete and get us to $3.7 trillion. My guess, based technically, is that we get to about $6 trillion as a market cap. I think that's lowballing it, by the way, for the bull market. And hopefully the altcoins that we pick do spectacularly. If you guys want to take things a step further, unlock my entire portfolio, exactly what I hold, get on board with the 100x challenge and join an amazing community of like-minded individuals, do consider becoming a patron. There's a link in the description. It's a very fair fee for the amount of sort of content you get. We are still waiting for that resumption of the dollar to the downside. I think a breaking of this trend line is a very good thing that I'm on high alert for. That's likely going to see risk do rather well. We've not checked in on gold in a little while. Not overly keen on that sort of marginally higher high, but it's very much on its way to this head and shoulders target. And then I think it's got these ones in the bigger time frames to come. And of course, Bitcoin will outperform that. Hopefully, certainly, technically, that is signaled. So that is it from me, ladies and gentlemen. I hope you all enjoyed this update as much as I enjoyed presenting it. On that note, I'm going to love and leave you. Have a fantastic Thursday, and I'll see you in the next daily market update. Thanks for watching. See you in the next one.